Welcome back to another episode of Life in Focus. I'm your host, Ben Tate, and today I'm joined by Jared Prevost. Jared is a hard money lender based out of Tampa Bay, Florida, and also an active investor that's already completed 2 fix and flips. He started lending back in February 1st of 2024, and in his first 12 months, completed over 56 loans that amounted to approximately $17 million in loan value. He also runs a Tampa Bay investor initiative that's been going on since 2023. They have meetings quarterly, and he also has a monthly newsletter called the Flipside. Previous to that, he has experience as a property manager. He's done some underwriting and financial developments for a development company. He's also had some experience on acquisitions for wholesaling. So with all that said, Jared, appreciate you taking the time. Welcome to the podcast, man.
Yeah, you can tell I've done a bunch of random stuff my first couple of years in real estate, right?
No, it's good, dude. That's good. That's what you want to do. You know what I'm saying?
I mean, it's great. I know what I like and I know what I don't like.
Yeah.
And pretty well rounded. I mean, we were even talking about assisted living facilities before, like done a tiny bit in that space too.
Yeah, absolutely. Well, it's funny because a lot of people, they always ask, like, you know, what should I do first in real estate? And, you know, it's like, hey, do what interests you, or do what you have an opportunity to get your feet wet first, because you'll figure out soon enough what you enjoy doing, what you don't enjoy doing. And in any case, learning every part of the deal is positive. You know what I'm saying?
Yeah. Well, I used to honestly put a lot of pressure on myself. Like, what is the job? What is the thing?
Yeah.
But every single time you get into something, you take an opportunity, you steward it well, and you do a really good job with it. The best way to network is by doing deals and doing business.
Absolutely.
And it's like, hey, you don't like that after a while, the next opportunity opens up. That's what happened with literally every single thing that I tried. The next opportunity popped up while I was doing that and decided I didn't want to keep doing it.
Yeah, and the thing is, keyword, you tried it. You didn't kill yourself with analysis paralysis like most people do when it comes to real estate, because it's so scary. Like, where do I start? I don't have the license, yada yada. But to do that much stuff in a 2-year span, really, I mean, that's pretty impressive. So
yeah, well, I appreciate you saying so, man.
Yeah, absolutely. So could you kind of, I guess, before we get too deep into it, do you want to just kind of explain to how you got to the Tampa Bay area and how you got started in the hard money side of things?
So here's the backstory. It's kind of a funny story. So went to college, small town. Honestly, not a good school. Not a good school. I won't publicly drag the name through the mud here, but I went because it was free.
Sure.
And I had no idea what to do. My parents weren't entrepreneurs. It was all medicine, and they were like, in medicine, it doesn't matter where you go. It matters what you learn.
Sure.
In business, it kind of matters what you learn, but it mostly matters who you know. And that was a different world than what my parents knew. So I went somewhere because I was like, I'll just try hard and learn. But honestly, there weren't a lot of ambitious people. I didn't really know what being an entrepreneur was. I didn't know anyone who was interested in real estate investing where I went to school. But my second semester freshman year, my econ professor was this guy who was like 30 years old, had a bunch of real estate, like 12 doors or something like that already. I later found out it was a lot of family money that helped him out, etc. But he ended up kind of being my mentor through college. Okay. And after college, went to Idaho to play in the mountains doing conservation work, before I started in the real world. But he called me up. He's like, yo, dude, buying a mansion in Grand Rapids on seller finance. And I was like, I don't know what that means, but I'm in. And so I ended up working for him for a while, managing short-term rentals, managing renovation projects, helping him with his personal life, all this kind of stuff. Ultimately, that relationship didn't work out. Was kind of overpromised, never made very much money at all.
Sure.
But through that opportunity, reconnected with some people that I went to high school with way back in the day who were wholesaling in Tampa.
Okay.
And I was like, honestly, talking to sellers all day doesn't sound that great, but I don't know what else to do, so let me go figure it out. Sure. And so I came down right when the market changed, May 2022.
Okay.
Like the week the market changed.
Yeah, that's literally like when it was like, you know, like you said, changed.
yeah. Like there was a week that it changed. That was the week that I came down.
Jeez.
And that's what brought me here.
Yeah. So, I mean, I think that's positive, though. Everything, you know, people say is a glass half full, glass half empty. More importantly, glasses refillable, you know?
Yeah,
and
good point.
I think when you start real estate in an unfavorable market, so to speak, it's just like, it's kind of like stock trading too, because the markets ebb and flow. And a lot of times when people get into day trading, which I used to do, that's why I bring it up. But when people first get into it, it may not be the most ideal market for day trading, you know? And so that's kind of the time where you can learn, understand patterns, understand a bunch of different things. And then once the market turns back on, it's like, okay, I'm ready to make some money, you know? And so I think a lot of times, again, people are always waiting for the perfect time to start something. Or they might get too timid once, like, hey, the market's not good, I'll just wait till the market gets good again. It's like, no, let's just get our feet wet now. Let's do the, you know, whatever becomes hard now will be much easier later on.
Dude, yeah, I love that point because, I mean, let's just take wholesaling, for example. Anyone could wholesale in 2020.
Yeah.
When I started in 2022, like, I had really good mentorship working with Nick Camarada, doing acquisitions for him, but it was really hard. I didn't get paid for 4 months. And when I did get paid, it like wasn't that much, right? But the fact of the matter is, like, the people who have been doing deals consistently from 2022 to now and are like making money still, those are the people that when the market does change, like, a lot of times it's about who stays in a market the longest, not timing the market.
Right.
Because if you stay in it, ultimately you're going to hit the highs when they come around, and then you'll have the skill set to make money in the lows. And for a long time, I used to think it was about timing stuff, but sometimes now I think it's more about just staying in it and waiting for the timing to happen.
I would agree. And the thing is, I think you are unique for multiple reasons, but because you've worked on, again, different parts of the deal, your perspective's a little bit more wider. Yeah. And so you're not looking at things in a box. Like, I have to wait for wholesaling to be perfect again. You're like, oh, I can go over here and, do some lending, or I can go over here and do some fix and flips, or maybe ground up makes sense right now, you know? And so I think that's super important because, again, I always kind of walk people through this. I would say maybe you could argue late 2018, but probably 2019 Airbnb is where it really took off, right? Yeah. And then it was kind of perfect because we had COVID starting in March of 2020. Yeah. And then people were like, okay, I'll travel, work from home, kind of, double stimulated Airbnb at that point. Yes. Agreed. Right. And that was unique because, when I was in college and coming out of college, people thought that the best way to get into real estate investing was to go buy a duplex with the FHA loan, because that's the lowest, down payment, which I would still say get a 5% conventional instead of FHA. But in any case, go live in one side of the duplex, rent out the other, and you're doing real estate, right? Yes. And then they said, hey, if you can make after expenses minimally $400 a month cash flow, you're doing good, right? But after everything. And then from there came, well, you can get into Airbnb in 2019, 2020, and, that's how people learn things. But, it's a good example of how, again, the market's changing, but people that already had long-term rentals in that example pre-2019 could have easily made them into Airbnbs. Yes. If you added value during the holding period, well, it's just a longer fix and flip if you want to sell it in 2022. Yep. Right. And so it's just, again, seeing one thing could be three, and it's just, seeing opportunities, as the market changes. Yeah.
One thing that I've noticed from people that I respect in this business, I'm sure it's similar in others, is like, if somebody says like, I'm a fix and flipper, I'm like, well, you sound like you're not an entrepreneur. Right. The people that I find are really successful are the ones that are like, hey, I'm an investor. Right now, the market makes sense for fix and flip. So that's what I'm doing. Yep. And actually, I know you're building. What I've heard from a lot of people in the fix and flip space is like, hey, we were doing that 2 years ago. Market's better for ground up. There's more opportunity there. So that's most of our business now. Right. Or a lot of people who were doing fix and flip are now wholesaling a lot more because it's like, dude, days on market's up.
Yeah. Month after month, higher.
I mean, even if you're making good money, it's like, to recycle your cash takes so much longer on fix and flip when stuff doesn't sell quickly that you might as well wholesale half your stuff. Yeah. So yeah, I mean, to your point, man, it's about understanding, like getting into deals, learning, understanding what the market has available for potential exits, options, and there's so many of them.
Yeah. And two, it's like you said, like, also, like, just not keeping your mindset in a box. So even if you are a fix and flipper and you're really good at what you do, because I can see both sides of the argument, right? It's like, at some point, keep the main thing if that's what you're most efficient at. But at the same time, even if that's your main thing from an execution standpoint and what you're actually doing each day, it's like, hey, at night, like, let's brainstorm other parts, to make sure you're not missing something. And maybe you got so efficient you can now expand another vertical in your business. You know? And so, no, I think that's really good information. So let me ask you. So you did some financial modeling for a boutique firm on the development side of things. How has that experience kind of helped you on the personal investment side and really on the lending side too?
Yeah, so that was actually my first experience in real estate, how I got introduced to it. So it was a development company in my hometown. They would buy or build hotels, multifamily, and commercial.
Okay.
So that's a wide exposure to a lot of different models.
Sure.
And when you have to be the one that's like, I'm going to construct a financial model, you need to understand everything about the numbers. Like, I didn't know anything about loans. Learned all about how those work. I didn't know anything about cap rates at all. Learned all about how those work. And to bring it back, like, how does that impact my personal finances? To be honest, probably the biggest thing is I was like, yeah, investing in stocks is kind of dumb.
Yeah.
like if you want me to be real, I already had good financial, stewardship and was intentional about things. But when you understand the power of real estate, it's like, why would I basically be giving money? It's like 3 times removed from who actually ends up using it.
Yeah.
To get a return. I'm getting like 3 times diluted returns on something that I have no control or say over.
Right.
That's great if you're not an entrepreneur.
Sure.
If you are an entrepreneur, it's like kind of like you're saying I don't believe in myself to outperform some person I've never met before.
Absolutely. You're trying to mitigate risk, which I think an entrepreneur takes calculated risk, but you're not necessarily trying to mitigate the risk all the time.
Yes.
Because there's risk with anything inherently. But
yeah, right. Like, I mean, that's just not really possible.
Not possible, no.
I mean, even like a wholesale, it's like, well, you could get sued, so there's still risk.
Yeah.
And then in regards to like my strategy with real estate, the modeling for me, like single family is great. I think there's so much opportunity. It's really fun. It's fairly simple.
I think so too. It's nimble,
It's fairly simple. Like you lose out on a single family deal, it doesn't ruin your life. You lose on a commercial deal, that could kind of ruin your life.
Could, yeah.
So it's really great way to make money. Many millionaires are made through single family, but when you model and understand commercial, it's like for me, I was always like, all right, that for me on my real estate journey puts me on a track where I want to do commercial. For me, like lifestyle, where I'm want to live, etc. I'm like, dude, I want to buy RV parks.
Yeah. I love that idea. We talked briefly about that when we first connected.
Yeah.
And I love that idea because, and maybe my idea took it a different path than you were initially thinking, but we obviously have an affordability issue, you know, and some of what we're trying to, for any business to be successful long term, I think you're solving some level of problem for the world.
Correct.
And so with our construction company, our thinking is, let's create affordable housing, but not like in the terms of how we normally think of affordable housing for people that are
not government subsidized, just reasonable housing.
Reasonable housing for the average 2 or single income household that has college degree, small family, trying to make it in the world, right? And so what we're doing, because we can, I learned a long time ago, if you own the land, you control the deal.
Yeah.
If you own the construction company, you control the cost. Inherently market value is market value. And so right now we're building houses that could easily comp out at $700,000, but we'll sell them for $550, first come first serve, right? And so our process is hey, instead of, there's such a big margin in the construction world, right?
Yeah.
Most general contractors are making 50 to 60% margins, even on like renovations and stuff, right?
Yeah.
So a lot of people that may be turned off to even fix and flips or ground up, it's because they're maybe not linked up with the right general contractor. Even if it's their best friend, they may not know if they're getting like the best deal possible. Right. And so for us, it's like, hey, let's change our thinking a little bit. Let's, to be sustainable long term and thinking 5, 10, 15 years down the road from now, let's just give up 30% profit margins to have a guaranteed sale. I'm all about the guarantee, right? Even when I did stock trading, I'm like, you can trade penny stocks and make 100%, but for me, I would wait for it to move, take my 20%, cut my losses at 5%, and move on to the next one, right? And so, for us, we're trying to solve the problem of, hey, like, let's just make this affordable. Yeah, we might leave $100,000 plus on the table, but we sold it in under 30 days, and we're moving on to the next project.
Yeah.
You know what I'm saying?
Yeah, great for your annualized cash on cash return.
Yeah, that too.
Underrated, dude. Underrated. Rookie move for investors is like only focusing on bottom line profit.
Right.
It's like, okay, well, if you're only ever doing one deal, I guess so.
Yeah.
But the reality is, if you're running a business and then the nature of doing deals, like, you have to recycle your capital.
Absolutely.
So does it not make sense if you can do, rather than trying to sell, like, let's just say 2 houses a year and make that extra $100K, it's like, all right, well, if you can do for instead, because you're moving your stuff quickly.
Yeah.
And frankly, maybe you feel better about
Sure.
the quality and value you're providing. It's like, maybe that makes sense.
Yeah. And I think too, on the construction side, and this kind of goes hand in hand with fix and flips, but the reason why we like ground up construction is because there's so many markets right now that are proven markets, right?
Yeah.
For instance, St. Petersburg and areas of Tampa as well, from the Heights down to South Tampa.
Yeah.
These are proven markets, right? But the thing that St. Pete and these areas have in common is that it's very old supply. These are homes built in the 50s, 60s, and 70s, right? And so we're mitigating
30s even.
Yeah, 30s even, some of them, right? Some of them are still wood frame on block, like, or, raised up.
Yep.
Just, the big bad wolf can blow them over, right? So
Yeah, bro. No joke.
yeah, so we say that to say, like, listen, like, we're kind of mitigating some of our risk by some level of it by building, just knocking down and rebuilding to the latest code, hurricane safe homes, build up the foundation a little bit above minimum.
Yeah.
Put 5, 6, 7 core stem walls, so that maybe the garage gets wet if we have a hurricane, but nothing interior gets wet.
Yeah.
Putting hurricane impact windows, which are different than just impact rated windows, right?
Do you guys do when you're doing these builds? So, I started lending on builds this year. So I actually have 3 in South St. Pete and then a couple in Crystal River that are going soon. But what I've heard from a lot of people with these ground ups is like, obviously nobody likes a house on stilts. It looks ugly. It's kind of funky. And so what I've been hearing is very popular to get stuff raised out of the floodplain is having that garage be like truly, since it's not livable, truly kind of level, and then building the house almost like a half story higher.
Yeah.
Is that what you guys do?
Yeah. So, basically, there's two. So it's funny, even before all these hurricanes happened, we were doing this down south, down in Fort Myers area.
Okay.
Because it used to be if the living area was at least 15 feet above elevation, it wasn't mandatory to have flood insurance if you were in a flood zone. And so I know that kind of changes per jurisdiction, and now insurance is going through a whole, redo, so that may not be the case anymore.
Sure.
But in any case, so in the Shore Acres area, like Northeast St. Pete, any of these flood areas, that's exactly what you're going to have to do. And obviously FEMA's kind of forcing you with the 50% rule.
Of course.
Really a 49% rule.
Yep.
But in any case, and that's a whole other conversation about like the valuation they're giving people for their improvements. But first story is basically going to be unfinished spaced, right? And so you're going to have a 2 or 3 car garage, and then you can have other entertainment space underneath there, right? So you can still use it for different things.
Sure.
And you could still frame it in if you want or block it in type thing, but it's not going to be finished space on the property.
Got it.
Right? Which again, it makes sense. You have to do that at some level, right? I mean, there's really no reason of building living area on the first floor anymore if you're in a flood zone and if you're in the coastal area.
The FEMA policy does actually make good common sense.
It does.
It genuinely does.
It does.
Yeah.
I mean, we just saw right now thousands of homes get devastated, and FEMA's like, hey, if you want us to stay in bed with you guys, 50% of these homes have to be built to code, which we're way under that right now.
Yeah.
And so this is kind of their way of forcing people, which is interesting because if you go into, let's just say, lower income or rougher neighborhoods around the country, we call it gentrification, right?
Yeah.
But right now it's kind of, I don't know what the term would be, but it's interesting. It's a parallel because we're basically kicking out the retirees that have no debt on these properties because they can't afford to build it back. They're not even they're not allowed to build it back because the mortgage companies are holding on to that insurance payout because they know that it exceeds the 50% rule.
Yeah.
So.
Yeah. Yeah, and people on no income are just not going to qualify.
For a loan because they're taking $2,000 a month for the couple.
Yeah, it makes me wonder if there's just going to end up being a bunch of reverse mortgages or something. We could do that'd be interesting if there's reverse mortgage ground up loans.
Yeah. Well, so I what I see, because St. Pete has very unique Airbnb rules, right? So I had 3 Airbnbs. We had 3 Airbnbs that we just sold all 3 during the hurricanes last year, funny enough, just to go all in on the ground up construction stuff. And I say all that to say is we positioned our Airbnbs in areas that were legal in St. Pete, which were basically in the unincorporated areas, right? The reason why there's those strict rules in St. Pete is because the affordability wouldn't be here.
Yeah.
Hurricane or no hurricane, right? Big money would just come in here, buy hundreds of houses, and we would be like San Francisco 15 years ago, right? Where everything's over $1 million.
Literally, so my girlfriend used to work for TechVestor, which is one of those national. We will buy every house and turn it into an Airbnb. We don't care what it looks like. Yeah. And it's like, dude, the funny thing is if we've got national hedge funds that are buying, and by the way, I've been told, I was reading an article the other day where it's like they're starting to sell off specifically in Tampa Bay, some of these for cash flow reasons.
Yeah, I bet.
But it's like, dude, if they're willing to buy houses for the depreciation and cash flow and single family, which in Florida is like, frankly, terrible.
Right.
In Tampa Bay specifically.
Absolutely.
It's like, I couldn't even imagine the money, like if hedge funds got into Airbnb or something like that. It's crazy. So yeah, totally hear you on that.
Yeah. And another thing is there's a couple of different strategies, and I'll give you two. One would be for these hedge funds or these big private equity companies that want to come in here and still buy these homes. If they just need to place capital, because I think that's where it's a unique time frame right now, is the market might be unsettled, but there's a lot of money on the sidelines.
Yeah.
And it's been on the sidelines for a couple of years now, because people are like, what do? We got to do something. They're having all these investor meetings, board meetings, like, we got to do something, but we don't want to be foolish with it. Yeah. So they could come in here, buy up a bunch of supply or do ground up construction, and then just self-finance these properties. Yeah. And that would stimulate some buyers, right? If you can say, hey, we'll self-finance at 5%, you might get some activity, right? Seriously? That's the big boys. The smaller guys, again, if we're saying, hey, if you go get a loan, you link up with a GC that's going to give you a good deal on something because of, into perpetuity, you'll do deals together, et cetera, right? And he's playing the long game with you, and he gives you a good rate, and you build a project together. And let's say you have 125 grand in equity, right? Well, then now you have the power to seller finance that as well. Yeah. Right? And so now you can go seller finance that again at that same example of 5%. Yeah. Right? Because your equity that you have in the property allows you to do so. Even if the debt that you get on that property is higher than 5%, you can make it work because you have that 125K of equity in that example.
Yeah. Like your weighted average cost of capital is effectively, it makes sense.
Exactly. And then again, so I think it's just about getting more, just getting more creative with how we do stuff, but and to self-simulate we're looking at those options too, right? When you get to a certain point, we want to be, you want to get to the, I'll back up a little bit, talk about Airbnb, right? Yeah. People think Airbnb is just pie in the sky, or low hanging fruit rather, and it's just easy to do. And it is simple to do if you have, a good cleaner, you have a good property manager, you do all this stuff. But with more success in the Airbnb comes more issues, right? So for instance, with ours, we had all three of ours at 90% plus, which means that people are checking out on a Tuesday and checking in on a Tuesday, right? Yeah. To get into the 90s in Airbnb, you can't have those Tuesday and Wednesdays vacant, right? Yeah. That ends up being 8 to 10 days a month, that vacancies, and you're not going to be at 90%, right? Not to say you need to be at 90% to make money, but for the example, with all three at 90%, we have an average of, let's just say, 10 families or 10 parties coming in per month per unit. So just in those 3 units, that's 30 different families coming in per month. Inherently, doorknobs are breaking, or this needs to be done, or this needs to be done.
Tell me about it.
So it's just like, a lot of people think like, oh, I'm just going to go do Airbnb arbitrage and go rent this property and then sublease it. I'm going to do all this stuff. And it's like, are you going to be a super host? Are you going to have a property manager? Are you going to pay for the cleaner? Yeah. Where's you're going to have some maintenance, set aside. So it's like, a lot of people think Airbnb is like plug and play and I'm going to be a millionaire. And it's like, again, I'm not saying you shouldn't try it or you can't build some efficiencies with it, but like you said, I've tried it, I've done different things, figured out what makes the most sense from an opportunity cost standpoint.
You have to be dialed in on your systems with that. I mean, I used to be the guy that would show up at 9 p.m. because the stupid electronic door thing wouldn't latch in the door properly because it's an old house. I mean, that happened all the time.
Oh yeah, battery's dead on the thing, and you're like, whatever.
Yep.
So speaking of creative deals, what's the most creative deal structure that you've seen since you've been on the lending side of things?
Lending side of things, most creative.
Or do they not really tell you because they don't want you to be like, oh, we're not going to lend to you if you're getting that creative?
No. So here's the thing. The fun thing about being an LO. So I work for a company, right? I work for a company called Rain City Capital. But also, the way I view it in my mind, hey, I run my own business on behalf of my clients. And I'm their guide to teach them how to get money from Rain City. Sure. And on the flip side, I want to make sure that I'm not doing bad loans, both for the to steward Rain City's capital, but also it's really important to me that I take care of my borrowers. Sure. That's what makes it fulfilling to me. Yeah. And so when there's something creative that comes up, I'm like, tell me everything, and I'll tell you
if it's possible.
Yeah, if it's possible.
Where the holes are.
And yeah, exactly. And so the interesting thing is any lender ever is going to say no seconds. Yeah. We actually will do seconds if you're upfront about it, but there's a hassle factor of let's see all their docs, yada, yada, yada. Make sure there's no usury, which second positions have usury all the time. Yeah. So some of the more creative stuff I've seen specifically in lending, You got are you familiar with Pace Morby's Morby method?
Oh yeah.
So I've seen people try to do Morby method on DSCR, close it, wait a week, get all the money back on a second from the seller.
Mm-hmm.
I did one recently. It's like with the worst title company ever. The seller was willing to give money back to the borrower at closing. It was pretty weird, and I was like, hey, I would rather, I don't know about this, nobody knows about this. You want to do your business, record a second after closing. Title agent sent the settlement statement for the second, but not the first, to our team multiple times, and was like, what do you mean it's right?
Yeah.
Nope. Terrible. So I've seen some of that. I've seen some of that stuff. Probably some of the better ones are like the 0% interest seller finance deals, which honestly is like, you know, you might hear that as an investor and be like, you'd have to be an idiot to do 0%. But honestly, if you set up 0% interest seller finance the right way as a seller, it's kind of a genius strategy.
100%. You can get above market value when you do that.
Yeah, but also like you're doing two things. One, okay, how do you get taxed on your interest? That's income.
Right.
How do you get taxed on your capital gains, like long-term capital gains?
Right.
There's actually technically, I think, tax evasion strategy.
Yeah.
Because you're lowering your taxes so much doing that.
Yeah.
But also, if you do 0% interest seller finance, like you're going to sell it for a way higher price, effectively building in your interest. But like, dude, that's the payoff. It's guaranteed.
Exactly.
Like I could sell a house to you on seller finance at 10% interest, and you could sell it next year, and then I never get the interest.
Exactly.
So, anyways,
I agree. I mean, that's what I was saying with the ground up too. When you sell or finance something, or it doesn't have to be ground up, but in that example, that's exactly what I was saying. Is like maybe it only sells for 500, but you can sell it for 600 now because you're going to give them an interest rate that they can swallow.
Yeah,
and the effective payment is reasonable or affordable or whatever the case is.
Yeah, exactly. I mean, dude, there's no secret why banks own every skyscraper in the world.
Yeah.
It's like, dude, the money's made in the financing half the time.
Exactly. But we'll move forward. So with the Tampa Bay Investors Initiative, you know, what do you guys normally like get into at those meetings? You know, what kind of value, could attendees expect to pull from that?
Yeah. So we actually originally started it as it was an interesting time because it was post-COVID. And at the time, like, dude, there was like no meetups going on.
Yeah. It
was kind of shut down. You had the TBIIs, but frankly, like that's kind of the old heads, and you'd go to those as a young person and like just hear about people who bought slumlord rentals and like after 2008, and you're like, cool, dude, like I don't care. I'm young and trying to figure it out.
What do I do? Yeah.
So we wanted to be like, hey, like let's just get people together, specifically wholesale, fix and flip, agents, like investment side, really heavily focused. Let's get people together, make it mostly about people meeting people so they can do deals together. And then also throw in, you know, short speaking segments on stuff like short sailing, creative finance. What else have we done? Pad split strategy. We got James Lascara coming up for our next one to talk about like, hey, if you've got a tear down and you're wholesaling, how do you actually figure out how much a builder wants for that?
Right.
Or I guess a developer would be the correct term, would want for that. But the biggest thing, man, if we're talking about like what should someone expect, dude, you should expect to go there and find someone to do deals with.
Yeah.
If you're not doing that, like our main thing is like, if I want everyone in the room to meet everyone else in the room.
Yeah.
That's the only way you're doing deals. I love the speakers. They're great people and they're doing deals locally. I mostly want them there so you know how to do deals with them.
Yeah.
Because you can learn what they're teaching you on YouTube.
Absolutely.
So that's the biggest thing. Like, yo, you need to be doing deals with people, and we've done a lot of deals with people within the group. I actually might offer on a deal right after this to someone who's like, I met her because she came to the meetup.
Okay, very cool.
And I've helped her sell 2 of her wholesale deals.
Jeez, all right.
As a lender, right? So, that's what to expect. Do deals. If you want to do deals, show up and talk to people.
Yeah,
you know.
I think that's powerful. And like you said, you want to be in the room. And it's kind of like, what to expect at a dating club. hopefully find someone to date.
Yeah, exactly. Like we're not, I mean, frankly, it's not to make friends. Like, dude, it's a real estate meetup. We're trying to do deals.
Yeah.
You know?
And it's, you know, it's supposed to be like not an easier barrier to entry, but, you know, people are trying to figure out their barrier to entry. And it's like, hey, just talk to somebody else that's trying to figure out the same thing. And, you know, the more you're around it, the more you're going to be, you know, in a position to seize an opportunity. You know what I'm saying?
Yeah, exactly. And the other thing, the more you're around other people doing deals, it becomes like the expectation.
Yeah, I got to do a deal.
And it also, like, it seems so hard to do, but when it becomes normalized, you're like, okay, this is what people do.
Yeah.
And by the way, like I'm just listed my second flip. It's actually in Seminole, unincorporated. So like, if someone wants an Airbnb, I was thinking about originally doing it with that property, but it's like, hey, here's my contribution to this deal. I made an offer from a borrower of mine after I already underwrote it, put up $5,000 for the EMD, carried some of the reno on 0% interest business credit. That was all I did. I didn't manage anything with the reno. I didn't do anything. Partner came in with most of the money, and you know, if we get our asking price, like it's going to be a really nice return for me.
Yeah.
So I think people have objections about, oh, I don't know how to do any of this stuff.
Yeah.
Dude, every single problem or objection can be solved by somebody in this room.
100%. And I think I think there's two things could be true, but there could also be no correlation, right?
Yeah.
And so I think sometimes people think that people that they know or may not know that have money or resources automatically have the information. And that could be farther from the truth.
Yeah.
Because people have money because they got paid well for being good at what they were good at.
Yes.
Right? That could be in any walk of life. And typically the people that have money, they're trying to figure out ways to keep that money or make money with that money.
Yeah.
And that's where you come in and fill, not just you specifically, but anybody can come in and fill that void by taking the time to understand real estate and say, hey, I understand the real estate. I understand how we can get a deal done. You have the money. Let me be your legs on the ground to get this done. You know, and
100%.
you can learn all that by going to these meetings and talking to people. And that's just obviously getting your feet wet. You know, whatever that leads to could, you know, obviously tenfold, you know.
100%, man.
So, so you mentioned the two flips, right? One's going. This is really your third flip you're talking about now, right?
No. It is flip number 2.
Okay.
Yeah.
So the first one, you said you didn't make money on that one, but it was a good, you know, learning
good
experience.
framing. Lost money, didn't make money. We lost.
Yeah. So like walk us through that, because a lot of times we're only posting our wins, and I think you learn. You don't. For me, I don't learn anything from the things I win. I learn everything from the losses. They stick with you the longest. And when I'm in the second deal, I'm making sure I don't make that same mistake. So walk us through what you learned from it and kind of what went differently than what you initially expected.
Yeah. So there was huge like pivot point in my life, because at that point I was trying to do my own wholesale thing, but I was doing it virtually, and then I had this flip going. But the reality is, not only did I not know that much, I also wasn't smart enough as an entrepreneur to like use the who not how method of like who can be the ones to guide me on these things. I mean, I bought the deal from somebody I didn't know and had never done business with. Red flag. Frame house, red flag. Doing with a contractor who we actually were coworkers, but we hadn't really done anything together on that side. So it was like, and he was pretty new with his business.
Sure.
So like, you know, what he quoted me was, we ended up being 60% higher
there we
for
go.
actual
Remember I said
rental.
About that margin.
Right? And it wasn't just him.
Sure.
It was also me thinking like, oh, we can keep the flooring, we can keep the baseboards, all this will be fine.
Yeah.
Inexperience, and going into it with a partner who's a really great guy. We never had any problems with the partnership, but it was also his first deal.
Yeah.
So from that, I learned how to recognize like tactical risks, properly underwriting, expectations for profit. And now, so like the second one I did, the reason that I liked it, I knew the person. It was inbound lead from Instagram. Nobody else, like it wasn't being marketed. So I had the inside track on it. I was bringing in a partner that I've done multiple deals with who's an experienced flipper. Deals where I was like, hey, I brought him into somebody else's deal. I funded him on other stuff. Block 1970 build. Not even close to a flood zone. Unincorporated Seminole. Had passed 2 4 points recently.
Nice.
It was just like, hey, is this a home run?
Yeah.
Not necessarily. Is it a no-brainer? For sure.
Yeah.
And then on the reno, I was able to bring in a project manager who literally did everything. I didn't even like pre-approve the designs because she had done stuff on 4 different deals for my borrowers. So I'd already seen her work and turnaround time.
Yeah.
So we set her up on an agreement where it's like, hey, 90 calendar days, you finish early, you get a bonus, a certain amount every single day times calendar days.
Okay.
You deliver late, it's a penalty, a certain amount of dollars per every calendar day.
Yeah.
And she delivered 9 days early.
There you go.
So it was just like learning the steps of how to mitigate risk, recognize risk, and then more importantly, who not how. I mean, I literally spent, I went to the house 4 times total, twice to shoot content, which was more about my lending business than that deal. And it spent literally almost no time on it. And I might make more on that than like spending, I spend a lot of time in my lending business. Yeah. So it's great. That would be the biggest thing, like my growth as an entrepreneur, right?
Yeah. And another way to look at it too, from like a positive perspective, even though that's all positive, is, at the end of the day, let's say you do 2 deals, one's profitable majorly and one isn't. Well, they can kind of the average profit, if you want to break it up, by 2, then it's like, all right, it's not bad. And you learn so much on the first one too. But like you said, there's certain things you can avoid. Like I think one of your videos is like stacking risk, right? And it's like, listen, if I can kind of take away a bunch of these risk factors, I'm going to have a better chance of being successful.
Not my idea. Something I'm in James Lascara's Elite Investor Mindset Group, which I joined right around the time that I lost money on that flip. Okay, which has been huge for my growth and connect. I mean, pretty much everyone I did the deal with is in the group.
Really? Yeah. Like, we all got to join this thing.
Yeah, exactly. So it was like, dude, the plumber's in the group, the designer's in the group, my money partner's in the group, like everyone's in the group, which is great.
Yeah, absolutely.
But I would. So the stacking risks. So yeah, stacking risks is something James taught me, and now, I care about what the numbers look like.
Sure.
But I care way more about is this on a busy street?
Yeah.
Is it right by, McDonald's and some kind of
Metro PCS is right there.
Yeah. Is it flood zone? Like those are the things that I care way more about, as opposed to the underwriting, because it's that kind of stuff that makes you sell for $50K less than your comps.
Exactly.
Even though it comped out well. So I care way more about that stuff and predictability than I do I don't want a deal where it's like losses here, profits here. I want my box to look like this.
Yeah, absolutely.
I want predictable.
Yeah. And that helps you identify deals that make sense for you in your deal box, and obviously it helps you. A lot of being efficient is being able to qualify in and out of a deal as quick as possible. Yeah. Right. And for you, that it makes, it's kind of 1-in-1 with your deal box. But I think that's what people need to understand is yes, can I make it? It's yes, I can go to Sam's or Costco. I can go buy a pack of water and sell it for $2 each. And I can make money that way. But is that the best way? Is that what I'm trying to do? Yeah. And so it's you can't, I think some people are like, oh, I can make $1 doing this. And it's but what's your 3-year goal? What's your 5-year goal? What efficiencies are you trying to build? What kind of structure? Because like you said, most deals should be how your second fix and flip was, is hey, I do 10% of the work on the front end, kind of making sure the deal makes sense for me. I do 10% on the back end to review different things. And the other 80% are people that are doing it for me. And I'm just kind of pulling the strings.
Yeah. You should be the coach. So this is a question for you.
Yeah.
Okay, so how many houses have you built in Tampa Bay so far?
In the Tampa Bay area, specifically Tampa Bay, over 10.
Okay.
Yeah.
So somebody sends you a deal, right? How long does it take you to figure out if this is something that's at least pretty close to a deal?
Probably in under a minute.
Yeah, exactly. Yeah. That's the key. That is the best piece of advice for people that I'm I want to fix and flip.
Yeah.
How long does it take you to figure out if something's a deal or not?
Yeah.
And usually I hear 15, 20 minutes. Yeah. It's okay, keep underwriting deals. Once that gets to 5 minutes tops, then you're ready to make an offer.
Absolutely.
So that's exactly how it should be. You should know this, if this is this is close.
Yeah.
If you don't, you're not ready to do, I don't care if it's fix and flip. I don't care if it's a mobile home park. I don't care if it's a skyscraper.
Yeah.
If you can't pretty quickly identify this actually is going to be pretty close, then you're not ready to do it.
Yeah. You should know what you're looking for, and that's part of the deal box. But I 100% agree. And that for me, I think my history in the valuation sector kind of helped me just I start with the dirt first. What is the dirt worth? I don't care what's on it. What is that dirt worth? Because dirt's what appreciates, and what you put on it is what depreciates, right? That's where our tax advantages come from. So it's always about the dirt. Dirt's going up, everything else is going down, right? From economic, because everything has an economic life, as they say, right? And so it's, even if you build something brand new, and it's 3 months old, and you say, hey, we need an appraisal on it, they're still going to put 1 year depreciation on that because it can't be zero, right? And so
that's interesting.
And that's where, that's why we're taking our tax deduction from depreciation every year. And I know we were talking about earlier when it comes to other modes of investments. If you talk to a lot of people, in the market participants, owners, operators alike, they'll say, listen, like if you factor in the cost of insurance and maintenance and vacancy and whatever the case is, real estate may not outpace the S&P or the market, right? But you don't get the tax advantages, and more importantly, you don't get leverage, right? So the example I always use is, hey, if Apple's $100 a share, I need $100 to get that share, right? That same example, I can use $10,000 to go buy a $100,000 home, right, with leverage, or maybe even $5,000 if I get a 5% conventional as a primary. So leverage and tax advantages is where the outpace comes from on the real estate side of things.
100%. I mean, the problem with stocks, I mean, especially bonds by their literal definition, it's dead capital. I mean, I guess you can get to a point where you have so much in stocks that you can borrow against it.
Sure.
It's like, oh, now you're talking. But the reality is, like, man, it's so hard to accumulate capital that if you can't borrow against it, what is even the point?
What's the point?
You I don't know how you really grow quickly unless you make a stupid amount of salary every year or income. But that's it's that exact philosophy why real estate's great. It's like, oh, you have equity? Well, guess what? You can get, HELOCs on rental properties now pretty easily.
Yeah, absolutely.
You can get those approved in 2 days. And like for myself personally, I stopped putting money into stocks because of the liquidity thing. But then I actually got into life insurance because, oh, dude, I can access the infinite banking thing. I think is totally kind of like misconception. To me, it's like, oh, I can borrow against 90% of my cash. So like only 10% of my cash is dead. And like the first couple years, you lose a lot of money in fees and stuff. I'm like, dude, I really like that I can have something liquid that I can basically access 90% of it and still making pretty good money. On top of, like, I suppose it's nice for the death benefit part of it.
Yeah, just in case.
It's like you're comparing apples to oranges. If you want to talk about like, oh, it makes 10% a year. Okay, well, call it leverage because, cranks things up.
Exactly.
So it's apples to oranges.
And the thing is too is the average person is working hard on some level to make sure that they have a good credit score, that their bad debt, so to speak, their credit cards and all that are at ample levels or zeroed out every month, whatever the case is. So I tell people, you guys have worked so hard your whole life, relatively speaking, to be a good candidate for financing and leverage. Let's utilize what you worked so hard for, right? And I think, again, information inefficiency, but our parents' age level, right? There was so much pride in paying off my house. I don't have a home, a mortgage or whatever.
No, my parents, they're big on that.
Granted, a lot of those homes were built or bought for $75,000, $100,000, $150,000 back in the day, so it's a little bit different. But listen, now there's so many people that have either no mortgage or a low mortgage left on their property. They have all this equity built up, and again, they're not leveraging it because they're just thinking, hey, I don't want to have a mortgage when I retire in 5 years. And I'm like, well, yeah, you can not have that plus a couple more rental properties or fix and flips or whatever you want to do. But again, that goes back to what we were saying a little bit ago. There's a lot of people that have money or resources or equity that they just need boots on the ground to go do these deals. So if you get connected at these networking events and stuff, you might learn how to do some deals, and you'd be surprised how many people in your family, have access to stuff, and they just need the confidence to know what to do with it.
Well, even beyond just like, oh, you can make the money, etc. To me, a lot of it is a deeper calling. Like, in my viewpoint, we're called to be stewards. And so if your philosophy for life is like, hey, I'm not going to really steward any of my assets, I'm just going to give it all to some wealth manager and like do my job and then I'll retire. I'm like, that's fine. That works for a lot of people, but is that your highest calling and how you want to steward opportunities? Just like, man, it's got to be more fulfilling to like be involved in investing in your local community. The other thing I love about real estate is like, what happens when you do real estate? You change your own community, you invest in your own community. What happens when you put your money into stocks? You know where it goes? Shipped out to New York, shipped out to California, shipped out to the rest of the world. And it kind of like neglects your own hometown in some capacity at a high level. So I'm just like, I think honestly from a fulfillment and becoming the best version of yourself and not leaving anything on the table. dude, I don't know how you can't feel not called to put money back into your own community.
I agree.
Somehow in a way that makes money, right?
Yeah.
That's kind of like my.
No, I agree, man. I'm the same tip. I grew up very faith oriented, and like you said, we're called to serve, and that's why for me, like I've always said, anything I've been blessed to learn or somebody took the time to teach me, I will happily pass it along to somebody else for free, or if they want to take the time to listen. Because you know, Gary Vee says all the time, like 99% of you won't even listen if I told you exactly what to do. You know, and he's been preaching the same thing forever, which is why I like listening to him, because he stays true to himself. But it's so true. You know, it's like even in your own your own family, your own friend group, you're like, hey man, do this, this, and this. You're like, I don't know, man, I'm gonna do this. I'm like, I'm only telling you this because I've done it. You know, like I've got approved. I've done this thing. But like you said, I mean, that's why I'm hoping people pull from this podcast on some level too. Is like, hey, they might pull for something you said or I said or another guest has said, and maybe it motivates them to do the research. My whole thing is like, hey, I hope something motivates you while you're on the couch tonight to just go Google something. You know, it's like, or if you're on Instagram, you see that cool video, like, hey, let me go like Google wholesaling, or what does that actually mean, or what does this mean, you know, or whatever the case is to get your feet wet.
It's crazy. I was out to dinner with my girlfriend last night, and I didn't know this, but so she has like a successful Airbnb design business now, but the original inspiration, TikTok. Yeah. One TikTok video from two girls that were designers, and
that's cool.
That's what initially kicked it off, and then through being an agent, which she didn't want to continue to be.
Sure.
She met somebody who happened to be at a business that was connected with them, and then she got into that space, that's and awesome. Then it's like. Sometimes it really does just take a little bit of searching. And I feel like a lot of times God places on your heart, like, kind of that calling that he has for you. And when you see that inspiration, you know at least enough to get off the couch and, like, try to do something. You
Absolutely. Know? And the thing is, too, is, that he places so many opportunities before us, and it's just up to us to acknowledge that it is an opportunity. Yeah. And obviously be prepared for that opportunity too, because if we're not prepared for something, then we can't seize that opportunity. But a lot of it is praying for what you want, then going out and putting in the work to go make it happen, So he'll lead you there, but you got to drink the water sometimes, you know what I'm saying?
For sure.
So the future of real estate in the Tampa Bay area, are you seeing yourself here kind of for the foreseeable future, like down in this Tampa Bay area? Or
it's a good question. Yeah. So my plan, this has actually been something I've been chasing for a while. So I'm exiting this flip. We get some money in my pocket. I'm looking nice and financeable now because I'm technically W-2.
Yeah,
I got some decent income going. So my plan is to actually buy a house, Spokane, Washington. Okay. 2-1 with a basement. Okay. Or it could be a duplex, but there's just not a lot in good areas there. But buy like something that's barely financeable or not financeable, put it under contract, do a little bit of work, get it financeable, get a great deal, you know?
Yeah.
Like the hacks, the risky hacks.
The creative hacks.
Yeah. And then get in there and put money on my 0% interest business credit, make that thing look dope as a midterm rental. Yeah. And now all of a sudden, like that's where I see myself having a family.
Out west.
Yeah. But then it's like, all right, now I really have unlocked a level of freedom where it's like, I want to go back to Tampa Bay. I have so many close friends here, and most of my business is here. It's like, well, I'll put it on Airbnb at a reasonable price for midterm, specifically in areas for young professionals or medical professionals. Sure. That gets booked. Now I can go to Florida. I really want to spend a lot more time in South America.
Okay, that'd be cool.
I mean, dude, South America is incredible.
I love it.
Yeah.
I went to a couple places last year in South America.
Yeah, dude, it's great. You're a king in South America.
Yeah,
it's
absolutely.
Incredible.
It changes your perspective when you come back here. I'm like, geez, the appreciation you have over there is different.
Dude, yes. So that's my plan. Continue running the community here. I do, honestly, I'd be curious your perspective. I'm like, dude, with where property taxes are going and insurance and rents kind of flatlining, going down, and immigration from other states way lower than it was a couple of years ago. Yeah. And I mean, my personal view, like, I think the storms are going to get worse. I think the flooding's going to get worse. I'm like, dude, I just don't know if I'm a huge believer long-term Tampa Bay unless you're way out of the flood zone.
Yeah. My perspective is, obviously, in a perfect world, don't be in a flood zone, right?
Yeah.
You know, there's plenty of homes again that were built in flood zones, even in the short acres area, that were built in the last 3 years and they were fine.
Yeah.
While we're doing all this demo and dry out and mitigation and build backs for all these homes, the neighbors are drinking a coffee on their porch, up here, while we're down here.
You guys do a lot of work in short acres?
Oh yeah, a lot of work.
Yeah.
And so I would just say, like, if it's built to code, it changes the entire game. Most of the devastation we saw is because things aren't built to code, or there's been too much infrastructure in a small area. Because really, we have a drainage issue too, right?
Yeah, I have been told that specifically in Pinellas.
Pinellas has a big drainage issue, and that will. Because, we have flash floodings that aren't even hurricanes, and we have some issues sometimes. But
do you know, is that are there plans for that to?
There is, and they're starting on like a couple streets, and it's going to be like a couple year process. But that's been good. In the works for a couple years, just on how they're going to do it. But I would say the unique thing about Tampa Bay, and not just Tampa Bay, I think there's like 4 cities. I think there's like 4 areas in Florida that are unique. Orlando, inherently with the theme park. You got Tampa Bay, St. Pete, kind of looping them together. And you got Southwest Florida. And you could argue Palm Beach County. Fort Lauderdale's transitioning a lot, but Palm Beach County is where a lot of the families want to go. Yeah. Jupiter down to Boca, right?
Okay.
And so what makes Florida unique, outside of the tax and the taxes incentives that we have compared to other states, is that if interest rates are high in Florida, they're higher in New York. They're high in PA. They're high everywhere, right? And so because of that, I think Florida kind of offsets some of that in regards to, okay, well, if interest rate are 7%, I want to buy a house in Philadelphia. Well, I can come to Tampa, and at least I'm saving on my income taxes.
Yeah.
At least the overall values are going to be like Philadelphia. $400,000, you're going to be in the hood and may not be safe. $400,000 can still get you something, right? Especially right now, mid fours, you can get something decent.
Yeah, you can get something decent like Pinellas Park, Lealman. You can get
and those aren't flood zones, right? So Pinellas Park isn't.
A lot of it's not. Yeah.
And you could do Airbnbs in Pinellas Park too. But yeah, I think because everyone's dealing with a lot of the issues, like the only issue that we're dealing with that they're not dealing with is the flood zones and the hurricanes.
Yeah.
Right. Now I would even take hurricanes out of it because, again, I've lived in Florida for over 25 years, and we've never had hurricane devastation that we've seen this past year.
Yeah,
in my whole life.
So crazy.
And I've been through countless hurricanes.
Yeah.
And the reason why I was so devastated is because I live on the water, and of course, like Zone A, boom, we got murked with the.
Do you live in Shore Acres or no?
No, I live on the South Point. I live down by the Skyway.
Yeah, like Greater Pinellas Point.
Mm-hmm.
Yeah, that's a good.
It's a nice area. It's nice and quiet down there. But yeah, the water. I mean, we're on the water, so inherently, So I just think that as long as you're living in something to code, and that's the biggest thing too. And a lot of people that are even investing on the ground of construction side of things, they're over improving, meaning they're building too big of houses. The average house in like St. Pete, and I know it's kind of dated, but the average house size is probably between 12 and 1,500 square feet.
Yeah, for sure.
But everyone thinks you got to build 2,500, and it's like, what are you doing? You're not the king. It's like, just make it reasonable, and it helps your costs, and But the thing that's pricing people out on the development side of St. Pete is the dirt's too much. It goes back to the dirt, right? But again, when interest rates are high, when the supply is growing quicker than the demand, the only way you're going to get a haircut is on the dirt, right? Yeah. So the people that are selling dirt are going to have to come off their prices because that's the construction. The GCs are only going to give you so much of a haircut. Interest rates are what they are. The banks only is what it is. So it's like the dirt's the only place to get a haircut, and you see that in commercial or residential.
Oh, that's interesting.
Yeah.
So I'm curious your thoughts on this. So one of the things that, like, if you look on the data on like new house builds, average size of a new house is like, they're monsters.
Yeah.
The average house is like, that's new, is like 2,500 square feet at least.
Yeah, easy. And that's just the living. Not even, there are 1,000 in porches and garage and all that.
Meanwhile, your average starter house is 1,000 to 15,000 or 1,500 square feet, depending on the area. I feel like houses skew a little smaller in Florida.
They do.
Maybe it's the no basement.
It definitely is. Yeah.
So, but my understanding of it is that the economics of building, it's like, hey, you have a spread between your build cost per square foot, and then houses don't truly trade on $1 per square foot of living space, but they generally follow that trend.
Right.
At least that's my opinion. So, like, I don't know. I'm just curious your perspective on that. Like, can you pay more for dirt generally if you just built a house that was bigger on the lot versus something that's more reasonable? Or how do you guys do that specifically with your, I'm going to call them reasonably priced houses as opposed to affordable housing?
So like, just to make sure I understand your question correctly. So you're saying like, how to like, I guess rephrase, like, what do you mean by like paying more for the dirt?
Okay. So theoretically, if you can build, I'm going to use really dumb numbers because it'll be easy for me. you can build at $2 per square foot and sell at $3 per square foot, then math says build the biggest house you possibly can on the lot.
Sure. That's what you're saying.
And then that's like, you know, if you built the biggest house possible, you could pay more for the lot. And the person who's like, I want to build a reasonable house would have to pay less for the dirt.
Yeah. So here's the thing, right? I guess it depends on, it's going to vary a little bit, right? And it varies based on this. Sometimes when you're building houses for people, they go in and buy the land, come to you as the contractor and say, hey, I just bought the land cash. I'm going to use my land as the equity for the loan, right? And then I'm going to hire you to do the build. That case is going to be a little bit different. But if we're building like spec houses, right, where we're going to go buy the dirt, build it, and it's a speculative buyer at that point, at the end of the day, the end buyer is not going to normally be. That's why I love, you know, not to digress, but that's why I love real estate. Both sides are never equally as knowledgeable in residential, especially. Right. So you can always get a deal if you're with somebody that's never done this before. But a lot of times, if you're just doing a spec build, they're not going to even know. They're not going to care about the dirt cost, right? All they're going to care about is normally the top dollar line. So us as the investor or as the builder, as a spec developer, it's up to us to basically make sure that our total figure, if you will, for easy conversation's sake, makes sense for that neighborhood, right?
Yeah.
So so that's where it comes down to, okay, if my dirt is, let's say in St. Pete, the best I can get is 100K for a 7,500 square foot lot.
Sure.
Then, and I know that I can sell it quickly, 500, let's just say, I know my build has to be, you know, no more than 300 on the cost to make 100 grand in that example, you know? So then you start backing up. So then if you're like, okay, if I have to pay, let's just say easy math, 200 a square foot, then that means I can't be more than 1,500 square feet, right? And then St. Pete's unique because not every house has actual garages, right? And so you can get away. So now I can use my whole 15 for living, right? Or maybe I have to put a garage, and so I got to only have 1,000 living, make it a small 3-2 or maybe a big 2-2, maybe 2 suites, and then do a 2-car garage or a 1-car garage, right? So that's kind of how you want to back into it, because if you're doing a spec build, the end buyer is just going to see 400, 500, 600. They're only going to see that. They're not going to know like, oh, well, they had to pay 250 for the dirt, which you do in St. Pete in some places. So that's why it's not like you can't really make money unless it's going to be a custom home and you plan on living there long term. You know what I'm saying? So
that makes sense.
It kind of like runs the gamut a little bit, but I would say at the end of the day, it just comes down to comps, and it sucks because as a licensed appraiser, the residential guys are as lazy as they come. When you're doing a commercial appraiser report, it could be 150 to 200 pages long, right? Because you're doing an income approach, and there's no income approach when you're doing residential, right? And so that income approach alone could be 60, 70 pages with the market analysis, your rents analysis, you're creating a cash flow, cap rate analysis,
like
all
your
that
whole
good stuff.
DCF.
Hold your DCF, exactly. So that's all out the window. And then, you know, residential, they're just going off basically a sales comparison approach. They put a cost in there for fun, but even on a brand new property, the lenders rarely look at it.
The cost is literally just in there for fun. Like, let's make this close, but not the exact same number.
And I'm like, it's so subjective because what skews the cost approach is what you put in as your depreciation factor. So how can I quantify to you that I use 10 years of depreciation instead of 5 years depreciation? Right. So that's the whole appraisal theory stuff that the nerds talk about. But in any case, I think that that's why a lot of people like to develop and then hold, because then you get perceived value from the bank instead of worrying about market value. Because perceived value can easily be higher than market value. You know?
For sure. I mean, they're really, if you're an investor, there are there's like a different approach for how much I think something's going to sell for versus what I think it's going to appraise for. Sometimes I think it'll sell for more than what it'll appraise for. Other times it's the opposite. I think this is going to appraise well, but I don't think it's going to sell for that. And it's kind of hard it's such a nuanced thing that I can't really give like specific guidance on what that looks like. But it's I think about that. I'm like, oh, I bet this appraises at this. But I don't think it'll sell.
That's the whole. It's hard to play the game residential, but that is the game in commercial. That's literally the game in commercial, because now you can do some capex, as they say, right? You do some capital expenditures. Maybe you put $250K into the property, and then now supposedly it grows so now when you go get a new appraisal and they come to me and they say, hey man, we have 100 units in this building, and all 100 units got new kitchen, new kitchenettes, and yada yada yada. We're going to be able to increase rents by $500 a unit, or whatever the case is, right? So now you have 50 grand or 500,000 flow into your NOI capped at a 6% cap rate. Now they're like, oh, we just got $3 million more in value, whatever the case is. It's perceived value, right?
But in reality, you're like, I bet this doesn't actually sell for that.
Exactly. But then they call the appraiser and they're pushing the appraiser, right? Because if if I don't make that value make sense on some level, then that client can't close a loan with you, and now you can't get your commission because so it's like it's supposed to be third party unbiased, but clearly there's some game to be played.
Yeah,
and that's why in the pros world we're saying, is this reasonable, right?
Yeah.
Because at the end of the day, we're supposed to be objective, which means we're supposed to literally take the data, look at the the actuals and what it could be, and say, is it reasonable to hit this, right? And it's like, hey, if you're getting $3,000 a month and you redid the kitchenettes and floors in there, it's like, yeah, you probably can get an extra $500 a month, but they're locked into a lease. So what's the turnover rate, right? And so that's why people love senior housing, because the turnover is so much faster, but it's need based, and that's a whole nother thing. But but the whole perceived value versus market value is a big thing in commercial world, because again, those guys are just like, hey, I'm going to keep improving this property. I'm taking depreciation on it every year, but it's supposedly appreciating $3 million a year, $2 million a year, whatever the heck craziness is. But to wrap this up a little bit, what's the best way for people to get in touch with you if they want to attend some of these events? If they obviously want to get with you for financing, is it just your social? You got a website, or what's the best way?
I would say the same way we connected.
Okay.
Social media, Instagram is the place that I hang out.
Sweet.
It's fun for me. That's my marketing channel. And then likewise with these events, also Instagram, but a different handle. So you can find me at Jared Does Hard Money. You'll never forget what I do. I'm a nerd, and I just talk about real estate all the time. Pretty niche stuff, very, very local specific. Okay. And then Tampa Bay Investors Initiative, that's our meetup, community, Facebook group. That's just at TB_investors_initiative, I believe.
Okay, perfect. And I ask every guest this for the last question on the way out. If there's a piece of advice that you wish you knew this time last year, what would it be?
Oh my gosh. This time, let me tell you, things have changed a lot for me in the better in the last year. And if there were one piece of advice, I honestly think it would just be keep going.
Yeah. Keep going, stay in it.
Yeah, keep going.
Yeah.
Like keep going, and keep the mentality that like things just get better. Every year you're in the game, you get smarter, you get more connections. Like just keep going. It's usually harder now than it will be a year from now. And then you track that out another year from now. Not always true, but if you're pouring into yourself, you're becoming a better investor, you're becoming better networked, hopefully your reputation is getting better, and you just keep carrying that forward and compounding. It's like, dude, just keep going.
Just keep going. I love it, man. Well, thanks again for taking the time to come with us, come meet with us for this. And the goal is to have every guest on at least once a year, maybe twice a year, just so like the audience can grow with the guest over the future. Cool. And to hold yourself accountable to things we talked about today, and also, get excited about future projects that you don't even know about right now. And we'll just keep it going. And for those of you out there, please leave a comment or ask a question, and subscribe if you haven't. And we'll see you next time. Thanks.